For the Investing News Network, I'm Brian McGovern, here with Mark Noble, the Senior VP of ETF Strategy for Horizons ETF. Mark, thank you so much for your time today.
Oh, pleasure to be here.
So Mark, why don't we start with the path that Horizons has taken in regards to cannabis stocks? You guys launched HMMJ, that has become a leading index for the cannabis industry at large. What was the demand there from investors for these ETFs?
There's been a demand for marijuana equities probably for the last 2-3 years. We started to see early movers like Canopy in particular start to kind of capture the imagination of investors as we got a sense that with the Trudeau government there'd probably be a liberalization of marijuana rules in Canada. What happened though is that in order for something to be an ETF, it requires a certain amount of liquidity in order to trade on a daily basis. I mean, ETFs trade like a stock, so they need to be able to create new units and buy those stocks. So we've been looking at this for a while, but it wasn't until sort of around the early part of 2017 where we felt there was enough names, at the time about 15 stocks, to allow us to launch an ETF that would give everyone a one-ticket diversified solution to buy marijuana stocks. So that was the genesis of HMMJ, and from there it was extraordinarily successful. We've gone from $0 to $1 billion in 18 months. And that's really been a result of people recognizing that there's a real business and a real sector to invest in with marijuana stocks. The question is which one do you buy? If you invest in the sector, you're going to get a majority of that exposure. So that's really been the value proposition of HMMJ, and it's been extraordinarily successful as people have looked to diversify their holdings and get exposure to the sector in a liquid solution.
Yeah. Horizons has even moved forward with a second cannabis ETF. Can you talk about the reasoning behind launching the second one, the HMJR, the Growers ETF on the NEO exchange?
Well, internally, actually, we're actually a little bit more excited about the smaller companies in this space for a number of reasons. First and foremost, the valuations on the big names, a little counterintuitive, but the valuations on the big names are quite high because investors, particularly U.S. investors, are purchasing these stocks and they're doing so with a view that these companies are going to have a lot of scale and distribution at their disposal, which should put a moat around their market when legalization occurs and then we expand our global medical market. The issue with that is that you're paying a lot for that exposure. Where our view is there's a lot of licensed producers. In fact, the number of licensed producers has doubled over the last year. We've got about 40 now that can distribute. These mid-tier producers are very attractive for a number of reasons. One, if there's any shortfall in supply, they're likely going to be able to be very attractive acquisition targets, or in their own right, they may be able to find some of the branding hooks that allow them to move forward and compete with some of the big dogs out there. So HMJR, which is listed on the Equitas NEO exchange, provides international, so it's global exposure, and it's 100% invested in cultivators that have a market cap, so the size of the company is between $50 and $500 million. Yeah. And we think that's sort of a sweet spot for people, for a lot of portfolios, and certainly for a lot of marijuana equity investors. They probably don't have exposure to that portion of the market, particularly if they're an investor in HMJ or an investor in the large stocks.
Yeah. What are your expectations for legalization? This effect is gonna, this event is gonna take effect on the market. There's potential for big sell-off that's been predicted a little bit. What are you feeling like as we are days away from the event?
I think investors do have to brace themselves for a little bit of disappointment. What's occurred is we're betting on potential, and then not immediately after October 17th, but within, let's say, 6 to 9 months, we're going to actually start to see revenues of who's being successful at selling marijuana to the recreational public. And not everybody's going to be a winner. In fact, I think it's probably only going to be a small handful of stocks that are winners. I just don't know who they are, which is why I advocate the diversified approach. But I think that right now you've sort of priced in a market that's sort of in around the $8 to $9 billion range, which would put it on par with beer sales. And I kind of think that recreational marijuana sales being toe-to-toe with beer sales right out of the gate seems a little bit lofty from an expectation standpoint. So I think from that perspective, there's probably a little bit of disappointment initially on sales. That said, there's also a positive story here. And the positive story is that Canada's really only round one in the global legalization story. And I think that where people have not looked to the same degree is in the opportunities that exist outside of Canada. For example, in countries like Germany, which is 15 million people, a much larger market, they pay more per gram for marijuana. So these are much more revenue-rich areas that we're seeing these Canadian LPs expand to. So Canada recreational market itself is likely already priced well into these stocks, but the global opportunity and where some of these stocks may shake out as global players, there's probably a little bit more to go. So near term, we could maybe see a little bit of disappointment. Long term, there could be exponential growth.
For sure. Mark, thank you so much for your time today. I really appreciate it.
It's my pleasure.
Remember to find us on Twitter at INN_cannabis. Follow us on Facebook and find us also on LinkedIn. For the Investing News Network, I'm Brian McGovern.